welcome to our deep dive. Today, we're going to be tackling
some pretty big stuff.
some long-term
Long-term economic trends.
Yeah. Especially
Right.
income and wealth inequality.
Yes.
You've provided us with excerpts
Right.
from Thomas Piketty's Capital in the 21st Century.
Yes, Capital in the 21st Century.
With a heavy focus on parts 1, 2, and 3.
Parts 1, 2, and 3.
We'll be diving deep into how wealth accumulates.
How wealth accumulates.
Impact on society.
Impact on society.
And what trends we might see in the future.
It's a fascinating exploration, especially since Piketty goes beyond, just the dry economic theory.
Yeah.
He weaves in history, literature, and even examples from classic novels to show how wealth has shaped societies over time.
Okay, so before we get too deep,
let's define what we mean by it.
Yeah, let's start with the basics.
What is economic context?
Right. It's, it's more than just
money in the bank.
Money in the bank. Capital refers to a much broader category of assets.
Okay.
So things like real estate,
Yeah.
financial assets, so that's things like stocks and bonds, and business capital,
Okay.
which includes factories and machinery, patents,
So it's basically anything that can be owned and traded.
can be owned and traded for value.
Okay, so this is excluding human capital, like
But excluding human capital.
skills and education.
Skills and education.
Got it.
Right.
It's interesting how Piketty
Yeah.
uses 19th century literature to illustrate this.
These concepts.
Yeah, he points out how
He points out how
authors like Balzac and Austen frequently use specific amounts of money in their novels.
specific amounts of money in their novels.
Yeah.
And those amounts had real meaning for their readers.
Yes. And readers in that era understood the weight of those figures because currencies were much more stable back then. So
It's a reminder of how, like
a dowry of 1,000,000 francs in Balzac's time really painted a picture
a very clear picture.
social standing, that character's social standing and economic reality.
Exactly.
Yeah.
That level of detail wouldn't really
Very
make as much sense in today's world.
right. It's a reminder of how
Exactly.
economic realities impact, something as unrelated as
Can impact even something as seemingly
literature.
unrelated as literature.
Right. Now, I'm curious about the historical context.
I'm curious.
Piketty compares capital accumulation in Europe and the United States.
In Europe and the United States.
Highlighting some key differences.
Key difference? What stands out to you?
Well, one of the biggest things that jumps out at me is the role of foreign capital.
Okay.
Foreign capital played a much smaller role in the U.S.
Right.
than it did in Europe.
That makes sense.
Yeah.
Given the U.S.'s history as, a former colony.
As a former colony.
Right.
Precisely.
Right. They weren't,
a
major colonial power in the same way that
a colonial power in the same way
European nations were.
that the European nations were.
Right.
So the U.S. wasn't heavily investing in and extracting income from other parts of the world. So its wealth accumulation was largely driven by
internal factors. Piketty also brings up the impact of slavery in the American South, which is often
often overlooked
in economic discussion.
in discussions of economics.
Yeah.
He emphasizes that slave ownership was just a massive concentration of capital.
Right.
Slaves were property.
Right.
They were bought and sold, and they generated income for their owners.
Right. A truly brutal
system.
Let's shift gears to
from a purely economic perspective, represented a huge accumulation.
Huge accumulation.
Rate of capital in the hands of a small group.
Okay. Let's shift gears to the broader dynamics of wealth accumulation. Piketty introduces this.
Yes, he does.
Fundamental economic equation that governs long-term capital accumulation.
This is it.
Yeah.
This is the big one.
Yeah.
Beta equals S over G.
Can you break this down?
I can break it down.
Yeah.
So it's simpler than it looks.
Okay.
Beta represents the capital income ratio.
Okay.
So that's how much capital exists compared to the total income generated in an economy.
Got it.
S is the savings rate.
Okay.
And G is the economy's growth rate.
So it basically tells us
how much capital.
Society accumulates based on
these factors. Now, does it matter why people are saving?
Well, that's the fascinating part.
Okay.
This law applies regardless of the reasons behind saving.
Okay.
So it could be for retirement.
Retirement. It could be for inheritance.
Just being cautious.
It could be just being cautious.
And the equation still holds true.
The equation still holds true.
Okay. I can already see how
you could see
this seemingly simple equation has major implications. For example, changes in growth rates,
especially demographic growth, can significantly impact capital accumulation. For instance, the higher population growth in the U.S. compared to Europe helped keep
the capital income ratio lower.
The capital income ratio?
Lower in the U.S., even with similar savings rates.
Okay, so thinking about the future. With potentially slower global economic growth. Could we see capital income ratios rise?
Could we see those capital income ratios rise?
Higher.
Even higher.
It's
a crucial claim to ponder.
And it leads us to the structure of inequality itself, which is where
structure of inequality itself. And
things get really interesting.
Piketty
challenges some common assumptions.
About
how we measure inequality.
He suggests that
we often overemphasize income from labor. He makes a compelling case that capital ownership
is far more unequally distributed. Than labor income.
And this leads to
extreme wealth concentration, as we see with the top 1%.
Yeah. Often owning
a
vastly disproportionate
share
of the total wealth.
Yeah.
It's hard to
of the total wealth. It's hard to even grasp the scale of that disparity. Absolutely. And it makes me wonder, how has inequality changed throughout history? It can't be a static phenomenon.
Isn't it? You're right. It's not a static phenomenon. The shocks of the 20th century, things like world wars, the Great Depression,
and the resulting policies.
And the policies that came out of those events significant concentration of time. But we've seen
inequality
rising again in recent decades. Yeah.
That brings us to a thought-provoking question.
It does.
Does inheritance still matter? In our modern
high-growth economy?
Many assume it's become less important.
Many people think that
it's important.
He challenges
the
notion that inheritance is irrelevant.
Okay.
He uses data from France to kind of critique Modigliani's life cycle theory, which suggests that people
mainly accumulate wealth for retirement.
Primarily accumulate wealth for retirement, but
in reality, people accumulate wealth.
People accumulate wealth for various reasons.
Yeah, for a lot of different reasons.
And passing on fortunes to heir remains a powerful motivator. Yeah.
So the idea that modern economics has diminished the role of inheritance is a myth.
Well, it's more nuanced than that.
Okay.
The share of inherited wealth actually decreased during the mid-20th century.
That
was a period driven by unique historical events. But we've seen it steadily rising since the 1970s.
Could we be headed back to
a
world that resembled
the 19th century,
where inherited wealth really shaped
society.
It's
a possibility. And that leads us to another fascinating comparison
Piketty draws between
the past
and the present.
He argues there are parallels between
the
highly unequal worlds. Between those highly unequal worlds
depicted by
Balzac and Austin.
And
our current situation.
What are those parallels?
So what are those parallels? Well,
I'm curious to hear
in both eras,
more about this.
Achieving a truly comfortable life
often
required access to capital far beyond what most people could earn from their labor alone. Either you needed inherited wealth, or you needed to be
part of
a small elite
with exceptionally high earnings.
With those exceptionally high earnings.
And Piketty points out that, like, the justifications...
Well, Piketty points out...
Those exceptionally high earnings...
The justifications for those exceptionally high earnings...
in time, haven't they?
Have changed over time.
Yeah. It's not just...
a matter of hard work and talent.
And talent anymore. You've hit on a key point. In the 19th century... high earnings
were often justified.
By the need for...
This need for a comfortable lifestyle.
Right.
The idea was that you needed...
enough wealth.
To pursue your talent. Contribute to society.
And live a life with dignity.
So it wasn't just about...
amassing extreme wealth,
but about having enough to live well and make a
difference.
What shifted? In today's world?
Today, the focus has shifted to...
supermanagers.
Supermanagers.
These are individuals whose skills are considered...
so rare and so valuable.
That
they command...
these...
astronomical
compensation packages.
I'm sensing some skepticism from Piketty.
There's a little...
about this supermanager narrative.
There's a little skepticism from Piketty about the supermanager narrative.
About merit?
Or is this truly about merit, or is there...
something else at play here?
Yeah. He suggests that it might be more...
It might be about power.
And social norms.
Than
actual productivity.
It's a fascinating observation that challenges, like...
It's a fascinating...
the traditional narrative of meritocracy. So it seems inequality isn't simply driven by...
inequality is driven by...
economic forces, but also
by more than just economic forces.
The social and political context.
It's also driven by the social and political context.
That raises the question, what can be done?
Right. That raises the question.
To address this complex issue.
How do we address this complex issue? Well, Piketty explores...
a range of potential solutions.
Progressive taxation.
From progressive taxation to...
increased
investment in education and...
social safety nets.
Yeah. He also highlights the need to address inherited wealth.
He even proposes... some radical ideas.
Like a global tax on capital.
A global tax.
Which could potentially... help redistribute wealth. On a global scale?
Although it would require...
significant
international cooperation. A lot of international cooperation. It's a bold idea.
Certainly bold ideas.
And it sparked a lot of debate.
Challenge.
But Piketty argues that we need to consider...
conventional things.
Bold solutions if we want to avoid a future where a tiny elite controls most of the world's wealth. His work encourages us
to think
critically about
like the systems we live in and question our assumptions about
wealth creation and distribution.
It's
easy to fall into the trap of thinking
markets are inherently fair or inherently fair.
But Piketty demonstrates how inequality
how inequality can become deeply entrenched.
Even in societies that value merit. Even in societies that value...
and hard work.
Merit and hard work.
What can listeners
take away
from this deep dive? First and foremost, I think Piketty's work encourages us.
It encourages us
to become more aware.
Of
the forces that are shaping. Our economic reality. And to be more proactive.
In
shaping those forces toward a more just and equitable world.
It's a...
the call to action.
A reminder.
That we have the power.
To shape
the future.
We want capital in the 21st century. Is a challenging read. But it's incredibly important. Because it gives us
a framework.
For understanding one of the most critical issues. Issues we face today. It prompts us to engage with the question of
how we build a better future.
And that's something
we're
monitoring.
I want to thank you for guiding us through
It's been my pleasure.
this, complex.
I encourage everyone to continue exploring these ideas and to join the conversation.
And our listeners.
About building a more...
We'll walk away with...
that equitable world.
The deeper...
It's been a pleasure. I encourage everyone to continue exploring these ideas.
Of the dynamics of wealth.
And to join the conversation about building a more just...
and inequality.
And an equal world.
That's a great note to end on. Thanks for joining us.
It's been my pleasure.
On the Deep Dive. Until next time.
I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
Keep exploring.
It's been my pleasure.
Welcome back to our deep dive into Thomas Piketty's Capital in the 21st century. We've been unpacking, how wealth accumulates.
How wealth accumulates.
And the role of inheritance.
The role of inheritance.
But one thing that really struck me was how Piketty...
how Piketty measures economic progress.
Economic progress.
Yeah.
He challenges the idea that GDP growth tells the whole story.
He challenges that idea that GDP growth...
What are your thoughts on this?
Well, he argues that we need to go beyond those big picture numbers and really see how the benefits of economic growth are distributed.
Yeah.
He highlights the importance of... understanding purchasing power, so what people can actually buy with their income.
Yeah, so
and how that's changed over time.
Yeah. While overall wealth might be increasing, individual experiences.
Individual experiences
can vary.
You vary
wildly. Piketty even gives some examples of how, the prices of...
He gives examples of how...
everyday goods...
Or prices of everyday goods...
have evolved differently.
They've evolved differently. He points out that while... prices have generally increased since the Industrial Revolution, some goods have risen faster than others.
Okay.
So, for instance, carrots might have kept pace with average price increases, while oranges, which benefited from cheaper transportation, could have increased tenfold.
So even if incomes are higher...
Even if incomes are higher...
People's ability to buy
certain goods...
certain goods...
might have changed drastically.
It
makes you realize...
Yeah, it makes you realize...
Those big economic indicators...
don't always reflect the reality on the ground.
Reality on the ground... It highlights the importance of looking...
out of the detail.
The granular changes...
that
aggregate statistics might obscure.
Yeah.
Piketty also emphasizes...
Considering the value
the value of public spending.
When assessing overall well-being.
Because
things like healthcare and education... Even if provided free by the government... Still represent, form of wealth.
Form of wealth or income.
Right.
Exactly. Simply looking at the cost of providing
those services.
Those services doesn't capture
their full value to
individuals. Quality healthcare and education.
Yeah, quality healthcare and education
can
dramatically improve
lives and opportunity.
Even
if it doesn't show up directly. In those GDP figures. Right.
It makes you think about
how
we define
progress.
Producing more.
It's not just about producing more.
It's about
the quality of life. People experience. Shifting gears
a bit. I want to revisit.
Let's revisit
that fundamental economic equation.
We
discussed earlier.
We talked about earlier.
Beta equals S over G.
Yes. That powerful little equation.
Yeah. Worth emphasizing that.
That's worth emphasizing.
This relationship between the capital income ratio, savings rate, and growth rates remains constant, regardless of why people save.
It's amazing how...
It is amazing
how such a simple equation captures such a complex economic
dynamic. It feels almost like a universal law of economics.
It's a universal law of economics.
And Piketty demonstrates how this equation has played out. Across
different countries and historical periods.
Countries.
He shows how slower growth
And historical.
With continued high savings has led to a significant increase in capital income ratios in many developed countries. Particularly in Europe and Japan.
Yeah. And he calls this trend like the comeback of private capital.
He calls this the comeback of private capital.
Right. Almost like like a new era.
The new era
of patrimonial
capitalism.
What factors have contributed to this trend?
One factor is...
Well, one factor is the privatization of wealth.
The privatization of wealth.
So that's like...
the gradual transfer of public assets into private hands.
The gradual transfer of like public assets into private hands.
This includes things like privatizing state-owned companies, deregulating financial markets.
State-owned companies deregulating
financial market.
And like
the government's role in the economy.
Reducing the government's role in the economy.
So less government involvement.
So less government and
private ownership.
And more private ownership, it sounds like.
It's a significant shift.
That's a significant shift
in the economic landscape.
It
has contributed to a shift from...
a shift from public to private ownership of capital.
The second factor is
the rise
in asset prices.
Particularly like real estate and stocks. I've definitely heard a lot about rising housing costs.
And
stock market
fluctuations.
How do those
tie into the equation? Well, Piketty shows how asset prices have tended to rise faster than average incomes.
Over the long run.
This has boosted the wealth.
This has boosted the wealth
of these who own those assets.
Further
increasing capital income ratios in many countries. Right.
So we have slower growth.
Privatization. And rising asset prices. All
contributing to this comeback
of private capital.
What does that mean for...
inequality?
Is
it likely to get worse? Well, that's the complex question.
It's the complex throughout the book. It's safe to say that
I think it's safe to say
this trend will likely lead to greater wealth concentration
for those
who already own capital. If capital is becoming more important.
Right. If capital is becoming more important than labor
income and capital ownership.
And capital ownership is already
highly concentrated.
Then inequality will
almost certainly increase, right?
Will almost certainly increase. And it leads to an important question.
An important question about the future.
To the levels of wealth inequality
will we see a return
in the 19th century
if
these trends continue?
Of wealth inequality.
What are the social and political
minimums that existed in the 19th century if these trends continue?
Implications of such a scenario.
It's a sobering thought. Thinking back.
It is a sobering thought.
To something you mentioned earlier. Looking beyond.
Thinking back to something you mentioned earlier, looking beyond GDP.
Economic progress.
To understand economic progress.
What other
factors
should we be considering? Piketty challenges us.
Well, Piketty
to think more critically.
Challenges us to think more critically about what makes a good
just society. He argues that focusing
solely on
economic growth can...
He argues that focusing solely on economic growth can lead us down the wrong path. Because growth doesn't always benefit everyone. Equally. And it doesn't tell us anything about things like...
And it doesn't tell us anything about...
Social mobility. Environmental sustainability.
Overall well-being. Precisely.
Piketty encourages us
to consider a broader range of factors.
When assessing
the health of a society.
Not just
economic output.
So it's not just about
the numbers.
But about the values.
The values that underpin our economic and social policies. It's about asking ourselves, what kind of
social policies
do we got?
Asking ourselves,
what
kind of world do we want to live?
Check social message. That's a powerful
resonates far beyond economics. It's particularly relevant in today's world.
Far beyond economics.
Where we face,
it's particularly relevant.
Unprecedented challenges. Where we face unprecedented challenges like climate change.
Ecological disruption.
Technological disruption.
And as we've been discussing.
Rising
inequality.
We've
certainly covered a lot of ground.
In
this deep dive. From
the nuances of capital accumulation.
To the limitations. The limitations of traditional economic metrics. Where do we go from here? In the next part of our
exploration, we'll delve into
Piketty's
analysis of inequality
into the factors that drive it,
how it's evolved,
and the potential consequences.
The factors that drive it and the potential consequences.
Over time. The factors that drive it and the potential consequences of these trends.
Right.
I'm ready to dive into
those
insights.
Let's move on.
To the final part.
Let's move on.
Let's have our deep dive.
Into capital in the 21st century. Where we'll explore
Piketty's thoughts on
solutions and what we can learn.
From
his analysis.
Welcome back to the deep dive.
Yeah.
In this final part of our exploration of capital in the 21st century, we're diving into one of the most pressing issues. Of our time, inequality.
Not just inequality in general, but the specific dynamics of income and wealth disparities.
Inequality in general. But
within and across.
Like the specific dynamics of income and wealth.
Right.
Disparities.
Within
across nations.
As we've seen.
As we've seen.
Understanding how capital is
accumulated and distributed is crucial to understanding how inequality
plays out in the real world.
Piketty makes a very striking point. The disparity between capital ownership
and
about the disparity between capital ownership
labor income.
He
emphasizes that capital ownership is far
more
unequally distributed
than labor income, leading to what he calls extreme inequality. This refers to the concentration of wealth.
In the hands of a very
small percentage
of the population. He uses that term extreme inequality.
And it really captures
the scale
of this issue.
What kind of data does he use to support this claim?
Well, he provides some very compelling data.
Yeah.
Showing that in many societies, the top 1%, the top 1% of wealth holders can own like
more than half of
all the wealth.
Yes.
It's hard to grasp the scale of that.
If they can grasp the scale of that.
It's like a completely different economic reality.
That's no different economic reality.
At the very top. Is this a new phenomenon?
Not at all.
Good.
Piketty traces this back through history, showing how it's been a recurring feature of many societies. He
even draws a fascinating comparison.
Especially those with low.
Between the world described in 19th century novels by authors like...
He draws a fascinating
comparison between like...
state of affairs.
The world described in like 19th century novels by authors like...
Exactly. It's like we're seeing...
Balzac and Austen and the current state of affairs.
In some ways.
Can you elaborate on that comparison?
Can you elaborate on that comparison?
Well... What are the similarities between those
in both eras?
Seemingly different worlds.
It truly sort of life often requires.
Like just similarities between seemingly different worlds.
Far beyond what most people
could
earn
from their labor alone.
Achieving a truly comfortable.
It meant you either needed to inherit wealth.
Often required access to capital far.
Or be part of that.
Beyond what most people could earn from their labor alone.
With those exceptionally high earnings.
It meant you either needed to inherit wealth or be part of that tiny elite with exceptionally high earnings.
Yeah.
Exactly. It's like we're seeing a repeat in some ways.
And Piketty argues that, like the justification.
And Piketty argues that the justification...
Those exceptionally high earners...
Those exceptionally high earners...
Have evolved over time.
Over time. Yeah. What were those justifications in the past?
Was justifications in the past?
In the 19th century, the focus was on...
In the 19th century...
Achieving a comfortable lifestyle.
Achieving a comfortable lifestyle.
So the idea...
The idea was that you needed enough wealth...
You needed enough wealth...
To pursue your talent.
To pursue...
Contribute to society.
Live a life of dignity.
Contribute to society and live a life of dignity.
It wasn't just about
accumulating extreme wealth.
Yeah.
But it was
about having enough.
About having enough to live
and make a difference.
Well, and make a difference.
Right.
How has that justification changed today?
How has that justification changed today?
Today we often hear about like super managers.
These
individuals whose skills are supposedly so rare and valuable
is that they deserve astronomical compensation.
Right.
But you mentioned earlier.
But as we mentioned,
Piketty seems skeptical of the supermanager narrative, about the supermanager narrative. He suggests it might be more
about
power and social norms.
Social norms than actual
productivity. He presents evidence that the astronomical pay of top executives
isn't always tied to their contribution to a company's success.
Isn't always tied to their contributions to a company's success.
It might be more.
It might be more about their negotiating skills or a culture that tolerates, even celebrates extreme wealth.
That tolerates
at the top.
Even celebrates extreme wealth at the top.
That raises important questions.
Right. That raises some important questions.
About how we address inequality. If it's not.
Simply a matter of market forces. The kind of policies
or interventions are needed
to create
a more just and equitable society.
Society.
Piketty explores.
Well, Piketty explores
a range
of potential solutions.
Progressive taxation.
To increased investments in education.
Investment in education and social safety nets.
Yeah.
He also highlights the need to address inherited wealth. Which he sees
as a key
driver of persistent
inequality. He even proposes some more radical ideas like a global tax on capital,
which could potentially
help
redistribute wealth.
On a global scale.
Although it would require
significant
international cooperation. It's a bold idea, and it's certainly sparked a lot of debate. But Piketty argues that we need,
and it's certainly
consider bold solutions.
Sparked a lot of debate.
If we want to avoid.
But Piketty argues that we need to consider bold.
Where a tiny elite controls
solutions if we want to avoid a future where
most of the world,
a tiny elite controls most of the world's wealth. His work encourages us to think critically about the systems we live in.
And to question
our assumptions about wealth creation and distribution. It's easy to fall into the trap.
Of thinking that markets are inherently
inefficient. But Piketty demonstrates how inequality
can become deeply entrenched. Even in societies
that value merit and hard work.
What can listeners take away
from this deep dive?
First and foremost, I think
Piketty's work encourages us to become more aware. Our economic realities.
And the forces that are shaping.
And to be more proactive.
In shaping those forces toward a more just.
And to be more proactive in shaping those forces toward a more just and equitable world.
A reminder.
It's a call to action, a reminder.
That we have the power.
To shape
the future we want. Capital in the 21st century?
Capital in the 21st century is
a challenging read.
But it's incredibly important.
because it gives us a framework
for understanding.
One of the most critical issues
that we face today.
It
prompts us
to engage that question of
how we build a better future. That's something worth pondering.
And that's been my pleasure.
Something worth pondering.
I encourage everyone to continue exploring these ideas.
I want to thank you.
And to join the conversation about building a more just and equitable world.
For guiding us through.
It's been my pleasure. I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
A fascinating topic.
It's been my pleasure.
I think our listeners will walk away with.
I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
A deeper understanding.
It's been my pleasure.
Of the dynamics of.
I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
Both in that.
It's been my pleasure.
Inequality.
I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
That's a great note to end on.
It's been my pleasure.
Thanks for joining us on The Deep Dive.
I encourage everyone to continue exploring these ideas and to join the conversation about building a more just and equitable world.
Until next time.
It's been my pleasure.
Keep exploring.